Jeff deGraaf, and I promise we're going to do more deGraaf this 2025. Jeff deGraaf owned this at Lehman Brothers years ago. He's now technical research co-founder Renaissance Macro, and this is well timed because yesterday on the Scott Wapner marathon at the Death Star, I mean, Wapner's on for like 6 hours straight. There's somebody on the show going after Jeff deGraaf.
Unbelievable.
On exuberance. So, folks, for Global Wall Street, deGraaf has the exuberance meter in hand. Jeff, I was amazed yesterday how Wapner had to defend you on the Death Star. Jeff deGraaf, are we overly exuberant right now?
I don't think so, Tom, and I do appreciate Scott sticking up for us. I'll have to send him a bottle of wine at Christmas. So
yeah, give him some of that MD-20. Wapner deserves an MD-2020. Give him that. Are we overly exuberant?
So I don't think so, and let me explain wwe measure the spread between high momentum names and low momentum names, and it's really nothing more complicated than saying what, if we rank names over the last year, what names are at the top 20% and what names are at the bottom 20%, and then how are those two buckets doing? And when we look at the 65-day rolling return of that spread, which I know this is a snoozer, but right now it's at the 82nd percentile. When it gets to the 90th percentile, and we play momentum. We, just like you, we play trend. We believe in those things because that's the right thing to do through time. We can tell you that when it gets to the plus 90th percentile, we'll take a step back and say, look, too many people are playing this, and this is way too dangerous for a reversion. And so while there are a few anecdotes that got thrown out there with the Metas and the Plantaires and et cetera, but those are anecdotes. And when we really look at the meat of it, even just the top 100 names in the Russell 1000, we're not in that 90th percentile. And why that's important, Tom, is the risk is that you say, okay, it's overbought, I'm going to sell them today. And the next thing you know, your app 11 is up 30%. And, we all know this, the market generally can be so seductive that it brings you back in at exactly the wrong time. So to be too early to fade the momentum trade really is dangerous and requires a lot of mental fortitude, if you will. And I don't think most people have that.
Jeff, I did everything I could to be sure Damien Sassower was with me today. Damien.
Jeff, I mean, look, Tom mentioned it early. You were at Lehman Brothers from 98 to 2007. I'm sure you remember that a young, aspiring, emerging market strategist came into your office in 2002. His name was Damien, by the way. And he didn't ask about oscillators. He didn't ask about Bollinger Bands. He was asking about the Ichimoku cloud. I mean, do you remember this conversation? Probably not. But here's my question for you. You look at performance year to date, and you're absolutely right. Equity momentum is the leader. It's up something on the order of 4% year to date. Trend is sucking wind here. Talk to us about these trend-following strategies. Talk to us about that nice upward-sloping risk-adjusted return that you're supposed to get from trend and why the strategy is not delivering.
Well, it's a fair point. And look, it's not going to deliver all the time, and so we have to be careful of that. And I do remember, because there aren't many people that talk about those clouds, which I can't even pronounce, so I won't try. So you did hit the nail on the head when they say, be unique, be unique. That certainly was it.
Thank you.
I'm looking for the technical analysis dictionary, trying to look up what the heck you were talking about. The bottom line is trends work, and we actually are seeing trends intra-market work, right? In other words, we're seeing trends within the sectors work, we're seeing trends within the industry groups work, we're seeing trends within the actual stocks work. The difference is what we have today is more of a trend market than a momentum market. And what I mean by that is, even though we're within, less than 2% of a new high, we have less than 50% of the names within the S&P 500 above their own 20-day moving average. Now, that's not a high bar, right? The 20-day moving average is obviously just the average over the last month. So it really is this rotational market that we're seeing, and that's why I think it's so frustrating for people that we've got the market very close to a new high, and yet 50% or only half the names are above their own 20-day moving average. And that gets really frustrating for portfolio managers. It is, though, at the same time, a very good market for long short. I mean, that is kind of the definition of what you want, which is I have the ability to add value through what I'm seeing on a long short basis.
Pro tip here, and this, of course, is part of Jeff deGraaf. I studied the clouds years ago. I had like a 2-week looking at Kenjusen and Senku Span A, and I just said, I don't get it. And what, folks, one of the big advantages of the Bloomberg is you can study the different technical theories to decide critically what you do like, and it's far more important, as Jeff knows, what you don't like. as well. I went down at flames on the itch.
And you can
What'd
back
call it?
test them. BTST on the terminal, guys. You have to check it out. But
Yeah,
you know,
back
the
test was
RenMac
great.
Weekly Survival Guide is must read. It is a must read for anybody in the financial markets, and that is all you, Jeff deGraaf. Talk to us about what's going on with copper. I mean, copper, Hang Seng correlations, overbought in a weak trend. I mean, I'm catching this. It's up 8% year to date. What is going on in copper?
Well, it certainly is has started to fire up, and that's reassuring because we are seeing some signs in the overall market that the cyclical part of the market is coming under pressure. So getting a little bit of a boost out of copper is certainly helpful. And you hit the nail on the head, at least in our opinion, which is we think, and we've been in this camp for probably 6 or 9 months now, that China is in the bottoming process. We had trend changes last year. We had a momentum surge, and there's a very good relationship there between the price of copper and both the Hang Seng and the Shanghai 300. So, really our biggest, most bullish call, and we've said this, and I'll say it here, we think China is in the 08, 09 stage where the U.S. was. We think that it is in that moment. That I mean, look, you had one of the things that we measure is alpha through time, and you can do this with markets, you can do it with sectors, you can't do it with stocks, or you can, but it's not going to give you any information. The alpha generation in Asia, particularly Hong Kong, the negative alpha generation was as extreme as anything we'd seen in 40 years. And unless you think that it's just going to evaporate and they're no longer going to be a global player, that just isn't sustainable. And so that can be early, and we certainly recognize that, but it was the momentum and the trend change that really said, hey, these two things combined are pretty powerful. And I think that's the residual of what you're seeing in copper.
For all of you across the nation on your morning commute, particularly for Global Wall Street on YouTube, subscribe to Bloomberg Podcast. It's our new television. Thrilled with what we see on YouTube. Jeffrey deGraaf with us for an extended conversation here from RenMac as we look at technicals and fold that into just as much not losing money is making money. Jeff deGraaf, the big change here, going back to the fossildom, I think of Chartcraft up in Larchmont and Wells Wilder and ADX DMI and all the trend-based stuff, to Damien at Lehman years ago with you at Merrill and Lehman. Jeff deGraaf, what's so different now is the financial media. And there's this frenzy, particularly on Fridays, of trying to market time by not participating in the market. Basically, it's one big media frenzy, go to cash. How should our listeners and viewers use your skills to participate in the market, even if they're hit with a frenzy?
Well, that's a really, really good point, Tom. And I mean, this gets very philosophical, but let's start with the buy and hold, right? Or let's just say a 12-month time horizon, or even a 6-month time horizon. Your probability over the last 100 years of having a positive return over a 6 or 12-month time horizon is above 60%. It's right around 65%, frankly. So let's call it 2/3 of the time. So if you think about that, if you had a coin and you flipped that coin and you had that advantage of being right 2/3 of the time, you're going to win a lot of money, right? So there's an extraordinarily high bar, and I think this is what people miss. There's an extraordinarily high bar to be bearish, right? Just your default position should be bullish. And as I always, quip when people ask me, how am I thinking about the world? I'm like, I'm a fully invested bear. That's the way I think about the world. I'm always looking over my shoulder, but I know that the default position should be bullish. That's not to say we're always bullish, because we're not. But again, the bar is so high to be bearish, and I think that's what people need to recognize. And one of the ways that we do that is through trend following, and we just say, look, if the trends are not on our side, then we have cleared that bar, at least one portion of that bar that we need to think about. And certainly we think about the Fed, we think about money supply, we think about some other things, valuation, all those things are important in that mixture. But really the one that stands out to us that's been the most consistent through time, because the circumstances change as to why there's a bear market. The market itself does not. The market will tell you that it's in a bear market simply by the trend. And so that ends up being our kind of final arbiter, if you will, of our market calls.
Jeff, a lot of strategists, myself included, we kind of make that mistake of equating technical analysis really with the equity market. But let's be clear, a lot of other markets, specifically rates and FX, trade on technicals. Talk to us about those markets. Are your indicators picking up movement, picking up direction in for example, the U.S. Treasury market?
Yeah, that one's a tough one. I mean, I will say we've been, both Neil Dutta, who's our economist in our shop, and myself, we've been more optimistic on, yeah, right. Don't tell him that. We've been more optimistic on bonds, frankly, than than what the outcome has been. And part of that is because the trend has been mixed. And our underlying data says, look, even though we had this inflation print, it looks to us, if we look at the really key root causes of inflation historically and where we are with a Fed fund, a 2-year yield, and a bunch of other factors, it says to us that bonds are actually probably a pretty decent buy right here. If we were to look at it out the next 12 to 18 months. I know there's a lot of uncertainty around that, but that's always the case. So the kind of gold standard, if you will, of some of the indications that we look are still saying that bonds look attractive. So we haven't had a strong call on that, or a good call, I should say, over the last 3 to 6 months. So certainly our tails between our legs a little bit on that one. But I think one of the best things for a technical is in FX, because you do get these policy shifts that don't tend, I know that the new administration may be an outlier here, but they don't tend to be that volatile. They kind of set a trajectory and they go. And so, one of the things that we're actually seeing right now, which I think is interesting, we're not getting the trends yet, but we are seeing some setups, is just the outright bearishness of Forex, right? So Canadian dollar, the euro, dollar. I mean, these things are really, really washed out. So even though the trends aren't in place, we have a couple setups in those that suggest that we probably get some relief in those currencies.
Jeff deGraaf just set up Damien Sassower there for our last question.
Well, I mean, he took the words right out of my mouth. I mean, really, the reality is when you're looking at rates and you're looking at fixed income, the reason a technical analysis, in my opinion, doesn't work as well is because of carry, right? I mean, you've got this coupon income that kind of smooths your returns out over time. But let's talk about BBDXY. Let's talk about the dollar here. We've seen a 160 basis point reversal in the last month, Jeff. I mean, it's choppy this year, man. So talk to us a little bit about what your indicators are telling you about the future direction of King Dollar.
Well, I think the overall trends for the dollar are still firm. I think it's in this long consolidation zone, right? In other words, overbought, momentum is fading. That usually results in a consolidation that takes you back into the longer term trend, if you will. Kind of think about it as a regression. I think the biggest weakness for the dollar here, the vulnerability is probably a better word, is what we see in that sentiment setup, right? It's become such a one-sided trade that anything that kind of shakes that is going to have people clamoring to get right-sided again, and that's the challenge.
Jeff, I got to get to that. Was very Louise Yamato, by the way. Jeff deGraaf, just simply, what is the best way to express long China?
Well, there's ETFs, there's the FXI, there's the MCHI, I believe it is.
Don't say Alibaba.
There's the KWeb. There's a lot of ETFs that you can have exposure. EWH is Hong Kong, so there's plenty of opportunities there to get exposure.
Jeff, thank you so much. Don't be a stranger. Mr. deGraaf works with Mr. Dutta at Renaissance Macro. I should point out that Mr. Dutta was my economist of the year, I think 2 years ago, with his incredible optimism on the American public.
Yeah, so what you're saying is he didn't do such a great job last year, right, Tom?
No, he did fine. But just, he was the
he
guy.
Was awesome. No, he was
the guy leading within the gloom of, 24, 30 months ago.
I bumped into him in Coach. We weren't even in Comfort Plus. I bumped into him in Coach on the way down to Florida. He was with his kids going away for the holidays. It was awesome.
Yeah. Were they well behaved?
Very much so. Not my kids, but his kids were like angels.
Unbelievable.
Incredible.
News you can use.